A few years ago, I did a video on evaluating multifamily property in 5 minutes. And actually, it doesn't take 5 minutes. It should take you a lot less than that. So I kind of want to fine tune it a little bit because I get so many questions on this. And many of you send me properties to evaluate, and I see your spreadsheets and I see how much work you're putting into these things, which is great. I commend you on that. But when I ask you, have you seen the property? No, this is my preliminary stage. I'm evaluating 6 properties. Okay, that's not very good, because what's going to happen inevitably, you're going to look at so many properties and you're not going to buy any of them. You're just not. You're going to say, we have a group, we have a lot of money, we're going to do this. You're not going to do that. You're going to end up looking at so many deals, you're going to get so sick and tired of it. And then finally, when you do get a deal, you just bought it because you've been looking at deals for so long, so you just kind of give up. So let's talk about the approach that I use constantly, that I've been using. And let's keep it simple. Let's say there's a 20-unit apartment building, all right? And rents are $1,000 a month for every single person. So you're bringing in $20,000 a month, gross. So in 1 year, you should be at $240,000, right? Forget about the exact terminology, forget about the NOI, forget about all that for a second. Let's talk about gross numbers. You're at $240,000. You should be able to calculate that in your head very quickly. If you need a calculator, no problem. Now, right off the top, take 50%. And I'll tell you why. Most of us that are buying property, we're not buying Class A. So those numbers don't count. 35% expense ratio does not count on a C-class property. You can't operate it. I have not seen too many properties where you can really operate them at 30%. I see some of you guys send me these 30% expense ratios. It's just not realistic. Why are you lying to yourself? There's no need to do that. Do 50%, take it off the top. Most of us are buying C-class properties. If you buy a B-class property, that's fine, but keep your life simple and keep the process real quick. You're gonna have to go through a lot of properties. So you're at 240. Take 50% expenses right off the top. That's everything. Now, you're at 120. So if you know your net income is $120,000 for that deal, now it's just a matter of, well, how much are you willing to accept, right? So if you are okay with accepting a 6 cap rate, 6% return, then $2 million should kind of be your top there. Now, this all takes in consideration, maybe you have investment money, you have institutional buyers, maybe this is your cash out of pocket, who knows, right? It's whatever you're comfortable with. And if you're okay with a 5% return, maybe you're at 2.4 million. It just really depends on that. Some investors are willing to take more risk, right? Maybe they want to hold it long term. It also depends on the property. Like, what are your plans to do with the property? But evaluating the deal should happen very, very quickly. These are preliminary numbers. These are not exact. We've been doing due diligence for a while. But a lot of times you're pulling out your spreadsheets, you're evaluating all this stuff. You haven't even seen the property yet. You don't even know what's possibly wrong with it. There hasn't been a physical inspection. How do you know what the repair costs are going to be? Because what someone's telling you, they're not going to tell you all the bad news. They're going to tell you, oh, this thing's great. This is fantastic. You never know. You don't know all this stuff. So very quickly, within a matter of minutes, 3 to 5 minutes, you should already be on the next property, right? There's a lot of property out there, and a lot of them are not advertised. So you're not interested you're interested in every, so if you're looking at an off-market deal, what happens all the time is somebody says, hey, send me your numbers. I don't even need you to send me the numbers. If I see a property off-market, and let's say it's a 30 unit, you should already know right away kind of what the rents are in the area, right? If it's a 2-bedroom, if it's a 1-bedroom. So whatever, take $1,000. So you know you're making $30,000 gross. Chop that up, you're making $15,000. Now it's a matter of, okay, what can I do with this deal? What can I not? Are they interested in this? You see what I mean? Evaluate them quickly so you can move on. Because a lot of times you're going to see these things listed at 4 caps and you're just like, well, how's that possible? And then when you fine tune these numbers a little bit, that's when you see more value. But initially, don't look at all that. Just look at, what am I okay with accepting? If I'm not okay with accepting a 5, right off the bat, you should know, okay, this one's gone. Okay, this one's next. go to the next one. So evaluate them real quick. I hope that was helpful. If you have more questions about it, please let me know. Glad to help you.